Ho, ho, ho. Happy, Merry Christmas Eve day, fellow BeachBum traders. Thank you for joining us for part one of our weekly trading game plan for the Christmas week of December 26th through December 30th. And we're going to try to determine if the Santa Claus rally is coming to the markets in 2022. So again, we wish you all a very Merry Christmas Eve day, and I hope that your holidays are starting off well. Good morning to everyone that's joining us in the live chat. Thank you for joining us. D.S. Gregg, Walter Lyons, happy to see you all. Hope you're doing well. So again, let's get started and let's do our market analysis, come up with our strategies, look at how the market performed last week, and see if we're going to get a Santa Claus rally in 2022. So let's get started. So here's our Google document with our notes for part one of our weekly trading game plan for the week of December 26th through December 30th. Again, these Google documents are public. We store them in a public Google Drive folder that's accessible to you. So you can find the Okay, hopefully we're back. Yep, hopefully we're back. Can you all hear me? Give me a thumbs up if we've got audio, video. I apologize. Great, thank you. So again, we're going to look at and see if we're going to get a Santa Claus rally in 2022. We just recently published a video. If you're unaware of what the Santa Claus rally is, what does that term mean? When is it expected to occur? What's the statistical significance of the probability that we're going to have a Santa Claus rally? Again, we just released this video yesterday, so you can view that video on our BeachBum Trading channel. Also via this direct link in our notes. It's also in the description box below. So again, if you're not familiar with the terminology and the time frame, essentially I believe it's the last 6 trading days of the year. It is statistically significant, so the probability is high. There are exceptions. It doesn't always occur. So again, we're going to try to see, are we going to get a Santa Claus rally in 2022? But again, you can get more information about what all that means and the history of the Santa Claus rally via that video. Welcome also John, Ricky Khan. Thank you all for joining us on this Christmas Eve day. Also, all this month of December, we've been talking about tax loss harvesting, the wash sale, as well as trading strategies in December. And we have all of these videos that discuss and explain what all that means: tax loss harvesting, tax loss selling, the wash sale rule. And again, we've been talking about various strategies of how to trade successfully given these events that occur in December. And we'll continue going into January to strategize on how to take advantage of some of these events. So again, you can view all those videos. They're all public on our BeachBum Trading channel, as well as via the links in the description box and in our notes. So let's look at how the markets ended up on Friday. I know it was a choppy, somewhat volatile day. The whole week was, pretty choppy, somewhat volatile, but we can see I'm on the homepage of FinViz. we can see the markets rallied towards the end of the day, all ended up. So, we might see the start of the signs of a potential Santa Claus rally. So again, everything ended up at the end of the day. Although, we saw more advances than decliners on Friday, but very few new highs, many more new lows. And we're kind of split between the number above and below the 50-day moving average. We still got a majority below the 50-day and a vast majority, over 70% below the 200-day. So although the signal towards the end of the day was bullish, the week as a whole was pretty bearish. So again, we're seeing, some inkling of that we might get a Santa Claus rally in 2022 by the way the indices ended up on Friday. So we'll dig a little deeper and see what we can find. Welcome also Flippa the Shippa. Glad to see you. Thank you for joining us. So some recent news, finance biggest winners, how a Santa Claus rally or lack thereof sets the stage for the stock market in the first quarter. And again, we'll talk about some other things going into January, the concept of the January effect, the January barometer, etc. So again, we've got a lot to talk about ending this year and going into next year. We see the consumer's one-year inflation outlook drop to an 18-month low. So again, we'll see that in our economic data. We see oil, it tested the 80 mark and then got rejected, bounced back down below 80. Natural gas, we saw a pretty steep drop off. We'll talk about this. And again, tomorrow in part 2, we'll also talk about some ways that we're looking at trading this volatility in natural gas, the drop off in natural gas. See gold is holding above 1800. It kind of tested the support at 1800, bounced off of that, and then we see the futures with all the indices are pointed green. See the euros, the currencies got a little bit of improvement versus the dollar. We see the treasury yields also increase. So we've been talking for quite a while that given the Fed interest rates, the bond yields needed to go up, which drives prices down. So they're still very inverted, still quite a bit below the Fed interest rate and the projected Fed interest rate. So again, as we've been talking for several weeks, we expect those yields to go up, prices to go down. And also in terms of a risk-off move, that's not unexpected either. So let's look at each of the indices. We'll look at the SPY. So again, from just a daily chart, we can see it's kind of hugging that 50-day moving average, quite a bit below the 20. Quite a bit below the 200. Again, it's in this declining channel as we've seen for quite a while. So it's just kind of oscillating in the middle of that channel right now. We'll zoom out to the weekly. Again, we see a pretty bearish move this week. It's somewhat of a doji, some indecision. So maybe we'll see, as part of a Santa rally, maybe we'll see a little bit of a turn up. But the overall trend is still down. We're still getting lower highs. We're getting lower lows. We haven't made a new lower low recently past the October low. But again, we see, the market's rolled over and headed down. So we'll have to see if we get a short-term Santa rally, and then if the market continues in its bear trajectory going forward. So if we look at the NASDAQ, the Qs, looks very similar on a weekly chart. Again, pretty bearish, pretty negative, more negative than the SPY. Looks like, it's testing these recent lows, hasn't made a new low, but it looks like it's definitely headed in that direction. So again, from a weekly standpoint, the NASDAQ, probably took the biggest hit. Now, and the Dow had broken up above its moving average. We can see it's gaining support at that 50 period moving average, 50-week moving average. So it looks like it's got pretty good support. So again, maybe a Santa rally in the Dow, maybe in the SPY. We can look at the IWM, the Russell. And the Russell looks very similar to the SPY, looks like a doji on the weekly. It's, getting rejected off of that 50-period moving average. So again, we might get a small Santa rally in the Russell and the IWM, but again, it's getting a lot of resistance from that 50-period moving average. And again, it's pretty much, in a bear market, although it looks like it's, gaining some support. So we'll see if that holds going forward. So let's look at the VIX briefly. Got a little bit of a pop around the GDP data, around the PCE data. So again, the VIX popped up on that data. It looks like it peaked out around 25-ish, so 25.40, and then started to decline a little bit. So we've got some increased volatility. Again, we talked about around the GDP data, around the PCE data, caused some volatility. And again, we had talked about this last week, that economic data was possible to cause some volatility, but again, we didn't get really an all-out panic, a spike up into the 30s, and now it looks like the VIX is headed back down. So let's look at some of the groups, sectors, industries, etc. Again, we've been talking for quite a while about sector rotation, how to trade that, how to make money in these sector rotations. So again, if we go to the groups tab in FinViz, we can see energy, made a recovery. It had been underperforming. So basic materials, utilities, those are, flight to safety, risk off. Real estate made somewhat of a recovery. See, the worst performers were technology and healthcare, consumer cyclical. For the week, technology, consumer cyclical. Again, these are all, inflation, high interest rates are negative for those sectors going into a recession. Financials performed well. So again, same thing for the month. And we see for the quarter, the best performers are energy, basic materials. So again, going into next quarter, next year, we might see again a continued recovery in those sectors. Just a quick reminder, none of our videos are financial advice. We're not financial advisors. All of this is for education and hopefully some entertainment purposes only. Yes, and DS Greg is mentioning tax loss harvesting. Again, we've been talking about this all this month. Now, again, the vast majority of the tax loss harvesting is probably over at this point. You're going to see maybe a little bit going into the very end of the year, but a lot of people have taken advantage of that already. And there's going to be a lot of people that are out this week, given the holiday week. So again, we expect a diminishment in the tax loss harvesting. And again, that's part of the concept behind the Santa rally. And again, you can see the videos on tax loss harvesting, the wash sale rule, how that all works, and why, again, that contributes to the potential for a Santa Claus rally via our other videos that we mentioned earlier as well. So we, again, hope that all helps. So if we go down to the industry level, we see energy, oil, made a rally. It had been down. So again, that sector rotation, again, uranium's up. Again, sector rotation, it was, all of these were down. Coal was down. So again, sector rotation into energy, probably some basic materials, the worst performers. Again, solar's been rotating up and down. We've been talking about that for quite a while. Biotech was down. Again, that's, high risk. A lot of zombie type of companies in biotech. We've talked about that for quite a while. Again, oil, energy was positive for the week. We got some other basic materials. You see aluminum, steel are back up, gold back up, silver back up. So again, a lot of sector rotation. Again, we've been talking about this and watching for these and talking about the opportunities that affords when you see these sector rotations. So again, continue to take advantage of those sector rotations as we see them. And, let's make some money trading based on the sector rotations, even when the market's going down or the market's, chopping around. There's plenty of ways to make money in any kind of market. And again, that's been our message all along. That's the kind of the underlying message in our channel is there's ways to make money in any market, different styles, different techniques, etc. There's plenty of ways to make money in any kind of market. So we hope to help you see that and succeed in your trading, irregardless of the type of market that we're in. So I hope that helps. And yes, you can make money on rotations again, as we've been talking about for quite some time, and also others of your fellow BeachBum traders are successful at that. And yeah, adapt or die, that was one of our messages, boy, months and months ago, is one of the themes of our weekly trading game plans, was showing the dinosaurs and the asteroid had caused extinction of the dinosaurs, is adapt or die. And that's true about the markets as well. Thank you, Flippa, for sharing that as well. So let me grab a drink and we'll talk about the economic data that we saw last week. I'll bring up the calendar from investing.com. We'll talk about the data we saw, the data that's upcoming in the next week. Okay, I'll put up the banner to our Discord as well. As we go through this economic data, you can also see we share this real time as it comes out in a Surf the Markets channel in our Discord. Our Discord is free to join. You can find the invite in the description box below. Also, I believe it's in the banner I just showed. So again, I'll just show you the Surf the Markets channel. Again, as this data comes out, I try to grab it from investing.com and post it in that channel as soon as I'm able. We also now have a news feed from Market Watch Economy, so it also gives good articles that interprets some of this data as it comes out. So please join us in our Discord. You can get this economic data in near real time. Let's look at some of the highlights that I captured. See, mortgage rates are still dropping off a little bit, but they've pretty much doubled over the past year, still very high. So the housing market's still in a recession. So existing home sales, we see, failed to meet expectations. It's down. Again, the whole housing market's pretty much in a recession. They've been saying that for several months. This was kind of interesting. The crude oil inventories were significantly down, and it really didn't cause a big pop in the oil price. Again, it tested 80 and then, pretty much failed off of that. So as I've mentioned for the past couple of weeks, I don't think people are paying as much attention to the crude oil, natural gas inventories in terms of price. I think it's more of a sector rotation, trading type of thing. It goes up, hits resistance, bounces down, hits a support, bounces back up. So again, I think there's opportunities to make money in that. And again, tomorrow we'll talk about other ways we're looking at trading that kind of sector rotation in and out of some of the energy sectors. So on Thursday, again, we got this GDP data. It was, hotter than expected, the revision up in GDP. So it says, maybe the inflation or maybe the recession is not as imminent as people have been saying. We also got continuing jobless claims was under what was expected. So the job market's still resilient, and all of these were interpreted by the market as the Fed being able to be more aggressive, more hawkish, etc. So again, The market didn't like that because, again, the Fed being more aggressive, more hawkish means, higher interest rates faster for longer, etc. So, which is, generally perceived as being bad for the market. So, again, the market took a pretty steep decline on Wednesday, Thursday on this data. And then Friday, we got PCE data. Let me zoom that out just a little bit so we can see it. And it was pretty much in line. But again, it says that inflation is not really coming down. So, but it was pretty much as expected. I'm going to shrink that table a little bit so we can see it better. So again, the PCE data is pretty much in line. So inflation is not really coming down. So again, the Fed can continue to be hawkish, continue to raise interest rates. We did get some positive consumer sentiment data. Consumer sentiment continues to improve slightly. Their inflation expectations, as you can see, came down a little bit. So that was pretty positive, and again, might have contributed to the late day rally. Although, initially when this data came out, the market was pretty red, as we saw earlier in the day. It was pretty red early on when that data came out, and then again made a more of a later day recovery. Again, possible signs of that we're headed into a Santa Claus rally. So just a quick reminder, we'll look at the economic calendar for next week. Again, reminder, the markets are closed on Monday in observance of Christmas. Also, the market's going to be closed the following Monday in observance of New Year's. So again, in your planning your trading for this week, we've got a real shortened trading week, 4 days, and then we're going to be off again for 3 days. So that, these holiday weeks, or we're off a 3-day weekend, tends to cause a little bit of an increase in volatility when we come back. So I kind of expect an increase, a little pop in the VIX on Tuesday, both the 27th and on the 3rd. Again, just a normal holiday weekend type of thing that we tend to get a little bit of a pop in volatility when we come back. So you can prepare for that, trade accordingly, etc. Welcome, Tony Rosas. Thank you for joining us. Glad to see you as well. So let's see if I missed anything from this week. Housing negative pretty much. Mortgages, mortgages are high. Existing home sales red. Again, jobless claims was, below expectations, but that's, kind of perceived as a little bit of a negative from the market standpoint. And sentiment, generally positive. The Baker Hughes oil rig count just slightly up. So, they are continuing to produce a little bit more, but not real significant. Good morning, Nagam. Thank you for joining us. Glad to see you as well. Happy holidays to you as well. So again, we see Monday it's closed, markets are closed. Tuesday, get some wholesale inventory, housing prices. Wednesday, again, mortgages, housing data. Again, we expect the housing market to continue to show weakening and recession. And we get, again, jobless claims on Thursday. So again, potential increase in volatility around that. Again, we always get crude oil inventories. And Friday, we've got some Chicago PMI that might, is inflationary data, but not a whole lot. So there's a whole lot of economic data that would cause, a lot of volatility, just a little bit. And again, there's going to be a lot of people on vacation for the holidays, out of the markets done, for the year, a lot of these money managers, etc. And again, that's, very, very reasonable why we saw the increase in, drop off in the market, the decline last week, and dumping is, people probably said, okay, they're done for the year, get their tax loss harvesting out of the way, and, they might have left the market. So again, we might see lower volume during the holiday week, less volatility, etc. But again, there's always opportunities in there. So we hope you find all this information helpful. Again, as soon as we're able, we post this data to the Surf the Markets channel in our Discord. So again, please join our Discord. It's free to join via the invite in the description box below. It's also available in the links section on our homepage, beachbumtrading.com, bum without the U. So again, you can find the invite to our Discord as well as links to all our social media, our Facebook group, etc. So we should be pretty much wrapping up with the earnings calendar, but, again, you can always take a look there's a few people reporting earnings still. Looks like we've got some gold, so we've got some miners, got a few tech, software, oil, but again, pretty much wrapping up. So it should be a pretty light earnings calendar week, but if there's anything that potentially might affect your trading, I'd keep an eye on there. Again, we've got a number of gold miners, etc. Again, reminder, the next FOMC meeting is not until the end of January, beginning of February. So again, we won't get another interest rate hike, another interest rate, at least in plan terms. Although I've heard, I think his name is Larry Summers, was calling for not an emergency, but he thinks they should meet and end their quantitative easing, their QE. That was interesting. But again, they're not planning to meet again until end of January, early February, so we won't get another interest rate hike until then. So let me jump over to Webull, to the market screen in Webull. We'll take a look at all of that. See if I can catch up with the chat. Grab a drink a sec. Okay, looks like you guys are having a great discussion. That's good. I love to see you guys chatting away, helping each other out. Got a great community here, and I appreciate all of your active participation and helping each other out, helping each other succeed in your trading. Just a quick reminder, if you're not already using Webull, you can still get their 12 free stocks by opening and funding account. Again, yes, you'll see we use Webull is the primary platform that we use for market analysis, for the majority of our trading, for a lot of our due diligence. So again, if you're not already using Webull, you can get 12 free stocks by opening and funding your account, 2 for just opening the account, up to 10 for funding your account with as little as a penny or $1. And each of those free stocks is worth anywhere from $3,000 to $3,000. So again, if you're not already using Webull, again, it's our favorite trading platform. You can trade from 4 a.m. to 8 p.m., and there's some nice opportunities that affords. So take advantage of those free stocks. You can always cash them out. If you don't want to continue using the platform, that's your opportunity, your choice. So again, this is the online browser version of Webull. We like to use the market screen, and we have a video about how we use this market screen in more detail to do some of our market analysis. I like this histogram in terms of showing the advancers and decliners and kind of the degree of, where are they. And we see majority of the advancers on Friday, where it's a very small percentage. We had just a few way out on the tails, so that's interesting. In terms of the money flow, again, the NASDAQ is outperforming the NYSE. We've seen that now for a couple weeks, so that may bode more positively for the NASDAQ going forward. Again, there's another calendar of earnings in the market screen in Webull, so you can see the near-term earnings reports, what's coming up in the near term, if that's going to have any impact on your trading, if it's at AMC after market close, BMO before market open. So I find that, again, helpful in a near-term look on earnings reports. And let's look at the best performing industries for the week. So education, again, we see a lot of energy is positive, coal, uranium. Finance was kind of split. Utilities, again, we saw that was positive. Metals and mining, basic materials, positive. Consumer staples was positive. Again, utilities, oil. We look at some of the ETFs. Welcome, Spacula. Thank you very much for that super chat. That's greatly appreciated. And thank you again for all of your support and help all year. Wow, that's really appreciated. Thank you very much. And Merry Christmas to you and Happy Holidays. Thank you. Again, thank you very much and happy holidays to you as well. Wish you a very happy and successful New Year 2023. Okay, if I look at the ETFs, see the direction of the indices. So we see up on the Dow, up on mid-cap S&P. Again, we've been talking that we might see, some outperformance in the mid-small caps. We've been kind of watching for that. So up on the S&P, got a little bit of volatility. That SVXY is the short on the VIX. So we've got, significant bets on the short on both the VIX right now. Again, small cap bull and the Russell, up on the Russell. Short on China, so somebody's betting short on China. So industry-wise, we see industrials, positive, communication, utilities, energy, so oil, small cap energy, basic materials, again, natural gas, uranium. Again, we've seen a rotation back into uranium. Uranium had been going down. We were looking for some opportunities in there, and they've run it back up. Consumer defensive, again, risk off, going into a recession, high inflation, etc. That's what you would expect. That's surprising real estate, but that's more of a recovery play. The real estate been pretty beaten down. So again, sector rotation, when these things bottom out, then we see a sector rotation back in. Financials, we would expect to perform well. Healthcare was pretty negative. Again, they've been rotating in and out of healthcare. So in terms of commodities, agriculture, coffee, platinum, palladium. Again, in a second, we'll jump over to the futures and we'll see, these had been down. So again, they're rotating back in. Coffee, platinum, a lot of the metals again. And bonds. So 7 to 10, 3 to 7. So again, the short end of the curve. And again, we'll see that in the futures and the treasuries. We'll talk about these and get in more detail. The various ETFs you can use to play these various commodities, these various futures. We'll talk in more detail in our ETF spreadsheet tomorrow. So again, hopefully, I know tomorrow's Christmas, so but we will be back tomorrow at 10 a.m. Same time, same channel, and we'll do part 2 of our weekly trading game plan. We'll pick our individual stocks based on all this analysis, strategies, etc., to put on our watch list for the trading week of the 26th through the 30th. So again, I understand if people are busy with Christmas and family, and that's appropriate, but we will be here, and you can always watch it after the fact if you're not able to join us at that time, and we appreciate that as well. So if we look at the futures in FinViz, again, we can see, it's a pretty choppy week. The Dow looks like it kind of bottomed, tried to rally a little bit. Looks, relatively stable. S&P, again, a lot of chop. Maybe, some positivity. Maybe, a shorter-term capitulation. And then maybe the indication that we might get our Santa rally in 2022. NASDAQ is more of a doji, less positive. Again, it made, a tail capitulation possibly, but the tail most recently is also testing that. So again, very indecisive in terms of the NASDAQ. Russell looks a lot like the SPY, more stable. We heard the Japanese adjusting their bond policy, and that caused a pretty severe drop off in the Nikkei. So there's our little pop-up in the VIX. Still looks like it's elevated, but again, we just saw this very short-term pop to 25, and then it started to retrace again. Oil, again, is trending up, but it's finding resistance at 80, so it's kind of bouncing between 70 and 80, 75 and 80. And again, this rotation, we've been talking, there's good ways to make money. We'll talk about some of the opportunities that we've been playing, just kind of swinging this back and forth with this cyclicality in oil between, 70 and 80. We've been making money on that, just at those swings back and forth. Same thing with natural gas. We can see it really fell off, and then it kind of wicked down just below 5, bounced back up. Tried to make a short run over 5. Looks like that run failed. So again, tomorrow we'll talk about some strategies for playing this drop off in natural gas. The most recent bottom, I know, because again, I'll talk about this in more detail tomorrow, but I tried to play this little run up, and again, it kind of failed to run. So again, we'll talk about how to play that again probably next week in more detail tomorrow. So gold, again, looks pretty stable over 1,800 right now. We'll have to see if it can continue its upward trend or if it's going to stall and roll over. Same thing with silver. Silver had a nice trend. We see, platinum, palladium. Palladium pretty much, looks like it bottomed and now looks like it's potentially turning back up. A lot of the commodities, again, you see how cyclical a lot of these guys are. They bottom and they run back up, and then they hit resistance. They roll over, they come back down. Again, all these commodities provide good opportunities to make money swing trading. You just play the bottoms. When it turns back up, you swing it up. When it peaks out, you swing it down. As you're able, given the various ETFs we have, or if you can trade individual stocks in those areas. So again, it looks like lumber might be swinging back up, sugar's high, So if we look at the treasuries, again, we had expected, yields to go up, prices to come down. So we're seeing that again in all of the bonds. And again, with the rising interest rate, bond yields need to go up to compete with the Fed interest rate. So that's kind of what we expected. But the risk-off move had elevated bond prices for a while. So now we're seeing that rotate back down. And the dollar continues to weaken slowly. So I hope that all helps. So again, let's talk about, we've talked about a lot of the trends, themes, strategies. We'll talk a little bit more. If you have questions, please throw them back up in the chat. If I happen to miss your question, please put it back up. I'll try to capture those at this time. So again, it looks, we've got indications that we might get our Santa Claus rally. The indication on Friday was very positive. We don't have a lot of economic data to jar it. We kind of theorize that most of the tax loss harvesting is pretty much done. And again, a lot of that's due to the time frame of the wash sale rule. And we'll talk about, all of the rotations that why would people harvest, and then the time frame of the wash sale rule, why they might jump back into some of those stocks going into January. So if, just a reminder from your trading perspective, this is, the last week, if you're going to harvest some tax losses to minimize your tax exposure for this year, this is, again, the last week to take advantage of that generally. And again, with the wash sale rule, you're going to have to wait, approximately 30 days to buy those stocks back. So, again, if you want to take advantage of that, you can figure out more about how all that works via our previous video. And if you need further assistance, again, we would recommend Mark J. Kohler, KKOS Lawyers. You can find their link here in this document. Also on our webpage in the business resource category on our homepage. Again, if you need assistance taking advantage of tax loss harvesting, we would recommend Mark J. Kohler, KKOS. That's who we consult with for any of our tax and legal type questions. So again, we're not legal, we're not tax attorneys, we're not lawyers, so we can't advise you in detail about those particular areas. And again, I'd refer you to Mark J. Kohler for that. But again, take advantage of that if that would benefit you to be able to offset some of your capital gains with some tax loss harvesting if that's applicable for your trading. So again, we hope that all helps. Also, we're wrapping up December, so you can see some of our other strategies for making money trading in December via this rule or via this video. And again, other strategies about how to take advantage of the Santa Claus rally. Again, we'll see, but come Tuesday, we may see a nice rally into the early January, given the Santa Claus rally. The indications don't look too bad. So unless something happens, we're going to be looking for this and taking advantage of the Santa Claus rally should it start to occur on Tuesday. So again, we expect some volatility, etc. And again, there may be some tax loss harvesting, towards the very end of the year. But I think the vast majority has already occurred. So I think, and everyone's going to be looking for the Santa Claus rally. So it may be a self-fulfilling prophecy and may reinforce itself. So again, hopefully there'll be some good opportunities to make some money taking advantage of that. So again, if you have any further questions, please throw them up in the chat. Also, you can always ask us further questions in our Discord. Again, our Discord's free to join. The primary channel people tend to hang out in is the Beach Party. We have a number of channels that focus on various trading strategies, various asset classes, etc. So we've been talking more about options lately, option strategies, and again, tomorrow we'll talk in more detail about our specific options strategies, our specific options trades over the past week, and what we're looking at trading in terms of options going forward as well. So again, if anyone has any further questions, again, you can always contact us. Please tag us in the Discord so we know to look at your question. We'll try to respond as we're able. You can always ask us via social media, via comment underneath the video. Contact us again via our social media, our Facebook group. You can find links to all of those sites on our homepage, beachbumtrading.com, bum without the U. And again, we'll try to answer your questions as we are able. Just another quick request is we talked about last week whether or not we should enable two-factor authentication on our Discord. And we'd appreciate if everyone would vote on that in our Discord under the announcements channel. We haven't gotten a lot of votes. Right now, I think it's 3-1, 4. So I'd love to hear your feedback on whether you think that would help or hurt our Discord. Again, all of this, our BeachBum Trading YouTube channels, our Discord, all of this is for your benefit, for the BeachBum Trading community benefit. Is we want a community that for the mutual benefit of all of our fellow BeachBum traders. And again, we're doing this all for you to help you succeed in your trading. So we want to hear, what can we do to make our overall community as most beneficial and valuable to you all. So please let us know. Also, I just put a topic in our trading psychology channel in our Discord to get people to start thinking about start sharing your New Year's resolutions regarding continuously improving your trading. So again, you can always put them in the comments of the video, etc., but you can also post them. Again, I've started this question, the trading psychology channel, as a thread here. So again, start thinking about your trading resolutions for next year. How can you improve your trading? How can you make more money trading in 2023? How can you succeed in your trading career? What are your objectives for your trading career in 2023 and going forward? And how can we help? So let us know that again in our Discord, in the comments, etc. And we'll talk more about our resolutions. We'll review our resolutions from last year. We'll talk about resolutions for improving our trading. And again, we want to talk about also what can we do to improve our overall BeachBum trading community for the benefit of all of our fellow BeachBum traders. So welcome, Born to Be Free. We're just fixing to wrap up, but we're glad to see you. Thank you for joining us. It's good to see you. So again, if anybody has any last minute questions, let us know. Otherwise, I'll wrap up. And again, come back tomorrow. We will be on tomorrow. We'll be selecting our individual stocks to put on our watch list for the trading week of December 26th through December 30th. And again, we wish you all a very Merry Christmas Eve day. If we don't happen to see you again tomorrow, we wish you a very Merry Christmas. And then we'll see you all back trading on the 26th. And again, we hope you and your family have a very Merry Christmas. And again, if you're able, we hope to see you again tomorrow. Same bat time, same bat channel, 10 a.m. Eastern. And again, we'll apply all of our market analysis, all of our strategies, etc., to pick our individual stocks to put on our top swing trading watch list for the trading week of December 26th through December 30th. Otherwise, enjoy your Christmas Eve day, your Christmas. Merry Christmas to all, and to all a good night. Good night.